At the end of the day, markets go up over time. And so there is no bad time to invest in the stock market. When you start seeing other companies like Google, like Meta, like Microsoft, like Oracle, not investing a couple $100,000, they're investing hundreds of billions of dollars. I've got to defer to them and just go, you know what? I think these guys must know what they're doing. Therefore, I don't think it's a bubble.
Welcome to another episode of the AI Download. I'm your host, Shira Lazar. And today, let me tell you, you are in for a very special treat. I've got the man, the myth, the legend, the Einstein of Wall Street. He's become one of the most iconic and recognizable faces of the New York Stock Exchange. He's the co-founder of the Wall Street Global Training Company, where he teaches technical analysis and risk management to the retail trader. He's also partner at Investing Authority, an alternative media platform dedicated to making financial markets more accessible and transparent. And according to him, he wanted me to add this, he's the best looking guy on Wall Street. And definitely one of the most interesting ones. I'm talking about none other than Peter Tuckman. Now this conversation gets into all the questions on your mind. Is AI a bubble? His thoughts on Nvidia and whether it's going to increase or crash, and what you should be looking at in terms of the stock market and investments. Of course, all of this, again, disclaimer, is not financial advice, and do your own research, which I will remind you throughout this show. But first, before we get into it, a huge thanks to my series sponsor, Hivelighter. They're your AI-powered reading assistant, helping you sift through information, getting personalized insights, and helping you spend less time scrolling and more time doing. Again, check them out at hivelighter.ai. And now let's get into it. Well, this is a highlight. Einstein of Wall Street, Peter Tuckman on the show. It took a lot to make this happen, and you're a very busy guy, to say the least, right now. We were just talking about this wild story of you recently going viral because of iShowSpeed.
I was fortunate enough to actually meet him at the Wall Street Bull. It was really kind of fun. I introduced myself as the Einstein of Wall Street, and I welcomed him to Wall Street, and I kind of tried to sort of engage him a little bit and sort of explain to him, what Wall Street was about, what it means to own shares of stock. And I told him that I trade, 500 million to 1 billion shares of stock every day, and that got his interest. The numbers got his interest. I mean, I believe the young man is worth 100 million or something. So obviously money is not the issue, but I was just trying to explain to him how how wealthy people become super wealthy is that they let the money make money for them. So I tried to explain about investing in stocks and not stuff. I sort of gave him a little bit of a spiel about, the fact that I said to him, the iPhone 17 just came out. Do you have an iPhone? He said, yes. I said, is it broken? He said, no. I said, so when the iPhone 17 comes out, are you going to get it no matter what, even though your iPhone 16 is not broken? He said, absolutely. I said, well, imagine this. There are apparently some numbers around that if we all didn't get the next iPhone that came out, and instead of if our phone wasn't broken, and instead we bought 5 shares of Apple stock every time the new iPhone iteration came out, by now we'd probably have a portfolio of 40, 50 shares of Apple, which has gone up thousands and thousands of percent. We'd probably have a portfolio worth a lot of money, as opposed to a drawer full of 16 broken iPhones, right? And so that got his attention. It's kind of it was a bit of a mind game. And it's kind of what I tell high school students about sort of investing in stocks and not stuff, about the fact that we're the greatest consumer generation in the world. We love to buy, I've got a closet full of stuff, as you do, I'm sure. And so we love to buy things, right? We buy things on Instagram, and then we spend twice as much as they cost, to have them delivered yesterday. Right. And then the minute we buy them, that I had to have it, but it's, it goes down in value the minute we own it. And so that's not the mindset that you want if you're teaching financial literacy or sort of legacy investing or anything like that. You try to get people to understand that you want to buy things that, that everything we use is actually made by a publicly traded company. And if it's so exciting and everybody's got to have it, well, then maybe if you actually bought that thing that makes the company, shares of the company that made it, it actually may go up in value as opposed to the thing that's probably going to go down in value the minute you buy it. And that intrigued him. He liked that idea.
Yeah. So you basically collaborated with one of the biggest digital stars, and it's this unlikely collaboration. And you were just telling me, how your life is completely blown up ever since, which is wild. You went from like 250K on Instagram to now almost 1 million.
Yeah.
And good timing for me to force you to be on my podcast. How about that?
You know what? It couldn't be better timing for you. It's absolutely my pleasure.
So let's go back because, like, how would you describe your brand, even Einstein of Wall Street? Obviously, hopefully you're looking at this maybe on YouTube. If you're listening, go to YouTube or maybe you see the thumbnail because you look like Einstein, basically.
I was nicknamed Einstein by Aaron Burnett, right? Who was a CNBC reporter who was on the floor with Bob back in the day with Bob Pisani. And CNBC's been on the floor of the exchange for many, many years. And so she and I were friendly. And one day she just said, I'm going to start calling you Einstein because you look like Einstein. We became friends. And, curiously enough as well, on February 19th, when the market was sort of going through that self-inflicted economic Armageddon that was caused by the tariffs and the new sheriff in town, she brought me back on the show. I had not been on her show for many, many years. It's called Upfront with Aaron Burnett on CNN. When I got there was a guy named Dan Ives who was going to be on the show that evening too. Little did she know that he and I have a YouTube channel together. He's the number one tech analyst in the world. He's basically Mr. AI. And we've had a YouTube channel for about a year together. So the two of us were on the show that night. And, we have sort of a very different way of sort of talking about stocks. It's a little more accessible and fun than your normal CNBC type of a character. And it started with one night, and then we were on every single night for 5.5 months.
Like, to be fair, what makes you so amazing? I mean, you've been doing this for how many years?
40.
40. You're how old?
I have been 55 for 10 years.
That's what makes you so special is that you've been around the block, you've been doing this forever, and yet you're more relevant than ever before because you've embraced also social media and everything. It's wild.
Correct. Most people of at least of my generation, or surely who are doing what I'm doing, there surely aren't brokers on the floor that have embraced social media. And my embrace is for a reason. That for me, I'm embracing the fact that we're in the midst of this democratization of the trading and investing community, and in a time in our lives where what was completely exclusive and not at all inclusive, which was investing and trading in the stock market, you had to be an accredited investor to basically trade the stock market. If we had this conversation 5 years ago, it would not be the same. And so post-COVID, post-Webull and Robinhood and all that kind of stuff, now anybody with an iPhone, and $100 can suddenly trade the stock market. A lot of people are on social media, but it's a matter of what you do. So for me, it's a matter of being able to inspire and motivate, the next generation of people to invest in their future and trade the stock market. So, I've taken it to all different levels. I have an academy with my partner, David Green, who is a former market maker on the floor. And we teach technical analysis and futures trading and stuff like that. We have tens of thousands of students all over the world, but also my approach to Wall Street is a little less, sort of old school and crunchy, and it's a little more accessible to an audience that could be from anywhere from 14 to 80. But when I walk down the street, I'm just as popular with the 14-year-old lacrosse players who are on their way to, private school than I am to the old guy who's coming out of the synagogue on Saturday who goes, "So, how's my portfolio doing?" So it spans generations.
Well, let's go back because you've lived through every market cycle from the dot-com boom to the financial crisis to now this AI wave. And of course,
look, I was not here. Some claim I was here for the 1929 crash. That is not a fact. That's erroneous on all counts. But I've traded more IPOs than any broker in history. And I've surely traded more crashes than any broker that's probably still alive. So I've been there from the crash of 87 until now. And I've been there through old open outcry auction markets to the wild technology that is embracing the stock market at the moment. So not too many people are still around and surely not talking about it.
Yeah. Well, now we're into this AI wave. So when you look at the floor today, what does this moment feel like?
The floor has gone through lots of transitions, right? As I said, I was there for literally open outcry, screaming and yelling, auction market, just you would see in the movies, that was complete chaos, it was organized chaos, and mayhem in lots of different ways. I mean, open outcry was a good way to describe it. We screamed and we yelled and we traded millions of shares of stock. And then as things went on past the 80s and 90s and early 2000s, obviously every industry was sort of had technology sort of take it over, right? As did ours. And so, the floor of the exchange was a very humanist place, right? It was a human marketplace, and there were a few around the world, but they sort of started falling off off the cliff as technology sort of came in. And the New York Stock Exchange itself has sort of been the last one to sort of hold on to that humanist, the human interactive part of markets. And I'm grateful for that because I'm sort of an technical. I still don't own a computer. I'm not a tech guy at all. I was the last person to really give up my pad and paper, for the handheld computer on the floor. They basically said, Peter, if you don't show up, and learn how to use the machine on Monday, you're out of a job. But look, it's happened in every industry. And so that's been a hard transition, hard for me because it's something I don't adopt. I don't particularly, take to technology that well. And so I've had to sort of reinvent myself a number of different ways. However, the floor went from a place that had 1,366 brokers and market makers and all different layers of support staff and thousands of people at the peak in the 80s and 90s, probably 6, 7, 8,000 people were on the floor trading, and supporting the what went on there in the open outcry period to now. You don't see thousands of people. You don't hear screaming and yelling as much. But in my opinion, I don't think AI has infiltrated our world yet on the floor. Technology has, right? We have handheld computers and we get able to send out 1,000 orders in 4 seconds, which was used to take hundreds of brokers. So that's a little bit different. And so we don't use AI for trading. We use algorithms. We don't use bots, right? However, the industry itself, there's high frequency trading. There are bots that read social media that can engage the market. And, there are actually companies that have, it can read a tweet that says takeover or rumor or whatever, and it can actually engage the market and actually buy stock, right? So then there are people who think that they can, hand over their money to an AI run brokerage firm or a financial advisor, right? And they think they can do a better job than the humans. I don't think that's the case. I don't think the stock exchange is going to get infiltrated by that kind of a thing. We are still, they've done a lot of work to maintain sort of a bit of a cushion around us from the human interactive point, that we're not going to be taken over by robots or machines, even though I interviewed a robot on the floor the other day. And as far as, algorithmic or AI financial advising, I don't think it can do a better job than human beings. But there are people who think so. But it's like, if a plane takes off on its way to Europe and everything's cool and fine, and it goes into automatic pilot, you're fine, right? You don't know if there's somebody in the cockpit flying the plane or it's just a computer. However, if you hit turbulence, you surely want to know that if you open the door, that there's a human being there flying the plane. I would say the same thing about my money. If, in a market that's gone through, we're one tweet away from crazy town, right? In the new world we're living in. And, one tweet from the president can send the market down 1,000 points, right? When he was Trump 1.0, he was at Davos at one of the economic forums. He tweeted China and tariffs. Market went down 1,400 points in 11 minutes. And by the day's end, it had reversed and gone up 2,800 points on the Dow. We had actually gone from a bear market by definition to a bull market over lunch, which used to take generations, decades, if not generations, to happen. So, the floor, there are not thousands of people. There's not a lot of screaming and yelling, but I think as human beings, we are more relevant than ever just because of the volatility and the necessity for judgment by a human when it comes to all that kind of volatility.
Yeah. I think what you said, it will be integrated into the systems, into the tech that you use, and what's it called? The software. You'll end up using software that includes AI, but I think you want to see a human at the wheel. Yeah. Still, at least, I believe, for now. And there will probably be companies that pop up that says we can do this just with AI.
Of course there are. And I'm sure there'll be financial advisors that believe that AI could probably do a better job advising than a human being.
Let's get into the big headline, right? Nvidia. So it hit that historic multi-trillion dollar valuation, of course. So from your vantage point, does it feel like a healthy rally or like the market is collectively holding its breath? I mean, there's a lot of pressure on Nvidia.
It's interesting you asked the question because recently Palantir announced earnings. They were blowout earnings, right? And the stock had rose into the earnings. But however, with blowout earnings, the earnings came out and the stock went down 9%. Right. So everybody's asking, well, how is that possible? Why would that happen? Does that signify that this is all a bubble? Is it signifying the top of the market? Why would a stock come out with great earnings and then go down? The bottom line was, even with great earnings, it would take a lot for the stock to be taken higher on those earnings. Also, it's the old Wall Street tagline, buy the rumor, sell the news. You have to realize that when a stock runs up into earnings and everybody's long, they've been long these names all year long. Okay. The bottom line is too, anybody who's been trading Palantir or Nvidia has a lot of profit in it already this year. Now we have a government shutdown. We don't really know what's going on. I know it's going to reopen, but we don't know how and when, how long it's going to take for the switch to actually work and all that stuff. You've got a lot of uncertainty coming into the last 6 weeks of the year, right? And so all of these components it does not necessarily mean that if earnings were great and it went down 9%, it may have nothing to do with Palantir at all. It could be a lot of uncertainty. A lot of funds close their positions out at the end of October, beginning of November, trying to lock in. Most people who've traded this market this year have had a good year. And if I am being judged as a portfolio manager, a hedge fund manager, and all those things, and I've got all this uncertainty around interest rate cuts and the Fed, and the president, as I said, we're one tweet away from crazy town and all that. Why would there is so much smarter of a move, judgment wise, to get out of my high flyers and preserve my 15-17% up on the S&P, more than that percent gains in the NASDAQ profits of the year, than take a risk on the fact that I would rather lock in what I've made this year, which is probably more than 17% on these Mag 7 stocks, Palantir and Nvidia specifically, then take a chance that that the market could sell off. There could be profit taking, could be a lot of different things going on for the next 6 weeks. Mainstream media loves to catastrophize all this stuff. I mean, can you imagine that for 258 days, we've gone nothing but up, all on the fact that we're in an AI revolution, and there's 1 or 2 days, suddenly it's all smoke and mirrors. It's all a lie. I mean, that is so ridiculous.
I think it's this idea that there's a single company that becomes the most valuable in history. There's a lot on this for the rest of the market. What does that do then in terms of market psychology? Do you think it distorts everything else?
Well, look, there are a number of individual stocks in history that have had such power and have had such moves and have become the high flyers, the flavor of the moment, that can actually single-handedly move the market on the upside or the downside. Very often in the S&P, it could be a Walmart. It could be any number of things, depending on a lot of other components, right? In the old days, it's like where IBM goes, that's where the market goes, And in this world, people are having Nvidia earning release parties as opposed to Oscar parties, right? All eyes are on this. Everybody's got a piece of this. And so we don't know where everybody's positions are. We don't know where the whales are. I mean, there's trillions of dollars that are invested in this stock, invested in the space, right? Invested in very complicated trades. I mean, when you have Michael Burry, right, who's made billions and billions of dollars in this market, suddenly shutting down his fund a couple of weeks before Nvidia earnings, he was the big short guy, because he felt he was no longer in step with the market, right? I mean, this market has surprised everybody. Everything possible has been thrown at this market in 2025, good and bad. Yet we've had 47 record closes in 2025, right? Nothing for a while there, nothing could take out the wind from this market. And then suddenly a couple of things happen. It was a bit of a perfect storm, and suddenly it starts to break down. And everybody, rather than just say, you know what? This is a profit-taking story. This is a closing out of the year story. This is A little bit of anxiety. It's just a preserve your profit story. It's suddenly, oh my God, that these companies are all smoke and mirrors. It's all a lie. The chips are no good. I mean, why? That's very typical of mainstream media to catastrophize these things because that's what sells papers. That's what sells whatever.
Let's talk about Michael Burry, who you mentioned inspired The Big Short. He shut down, as you mentioned,
Scion Capital.
Yeah, that shorting AI stocks like Nvidia and Palantir. From your perspective, what does a move like that signal, though? Because I do think that worried a lot of people.
It means nothing. It means that all it means to me is that Michael Burry is shutting down his firm. It doesn't mean anything for the bigger market. It doesn't mean anything for AI. I would imagine anybody who had a real, there are forever bears in this market. There are a number of them. It's Peter Schiff or any of these maniacs, and they will stay bear till the end of the earth. And you look, at the end of the day, you could look for a bear. The bears are not around. They have been shorting this market for the last 2 years. The market can outlive anybody's financial capacity of shorting, right? Because think about where we are. We are almost at Dow 50,000. We are at S&P 7,000. There have been forever bears shorting this market for the last 2 years. They've all been blown out of the water. And so, if he says to me that he's lost step with the market, look, maybe I could read into it that, his shorts are so painful shorting AI because AI is up 2,500 points, that the Mag 7 have been the biggest outperforming stocks in history. And that, he can't take the pain anymore. Maybe that's what it signifies. But at the end of the day, I would rather just say that maybe he just wants out. Maybe this has been a bad trade. You never know what's really going on behind the curtain. At the end of the day, people are preserving capital.
It's a pretty big move, though, and I feel like it then puts him in the spotlight. He knew it was going to make headlines. So there's something around that where he was trying to poke the bear or get people to bet against it. So he now makes money.
His existence has been all around ego, right? I mean, he how long did he just, he made this huge bet and he turned out to be right. How long has he made us feel, how long has he been gloating about the fact that he made billions of dollars off The Big Short in the first place? Yeah. Well, The Big Short didn't work out this time, right? Nobody who shorted AI or tech has made money this year. In fact, they've gotten decimated, right? Because these stocks are trading at record highs. So we need to understand that means that anything can happen. It's not usual. In the old days, people, the analysts would come out and say, Nvidia is doing well. We anticipate the earnings are going to be 20 cents better, blah, blah, blah. And the guidance is looking good for the next quarter. The earnings would come out. It would go up $6 or $4. And everyone would, make a sale, take their profits and move on. That doesn't happen now. Stocks go up and down $50 or $80. Like moves we've never seen before. There are way more stocks trading at $100, $500, $1,000 than ever before. There's so many different people with so many different derivative trades around the thing, so that a stock, which is everybody's favorite, can come out with blowout earnings and go down 9%. It's not that unusual. But people who have never seen this movie before think that must signify there's something in there that they're not telling me, the big guys are, they're hiding stuff from us. When if you look at it and you try and understand it, there's a way to make sense of it without it being a big conspiracy theory.
Let's play out both scenarios. Say it's a good earnings call, what could happen? Say it's a bad one, what could happen?
It just as crazily that a good earnings call, it can go down. A bad earnings call, it means it could go up. Because there were people who were sitting on the sidelines who did not buy in yet. And therefore, the earnings call is not so great, but they do see some guidance down the road that's going to be better. And then they're the ones that are buying it up. There's so many different ways of trading and investing in this market that in our world, a stock coming out with great earnings and going down 9% is not that unusual.
And for a lot of people, I think that believe in it, it's a long-term option, unless you're more of a day-to-day active exchange person, right? But I also think the worry is that it's holding up the market for so many other companies and what happens when that goes down or changes.
Every pullback or consolidation or sell-off that we've had in 2024 was nothing more than a buying opportunity. They were not a reason to sell. People need to understand that when stocks go on sale, if I've been falling in love with a leather jacket that I've seen at Macy's for a long time, and it suddenly goes on sale for 50% off, do I say, you know what? It's actually a really piece of shit jacket. I don't want it. Excuse my language. Or, oh my God, it's on sale. What a great thing. I'm going to go in and buy it. The fact that Palantir is up 150%. It used to be a $15 stock, a $30 stock. It ran up to $210. The story has not changed. Has anything significant? And then they came out with earnings and it went down 9%. Has anything significantly changed from yesterday to today in the company, in how they do business, in their product? No. Right? So that when it goes down 9%, it's a matter of how you look at it.
It's good advice. That is good advice. And it's very optimistic and hopeful, which I like. I've seen analysts say nearly 40% of recent US GDP growth is directly tied to AI, chips, data centers, cloud investment. So if AI slows down or this trade unwinds, how bad could that be for the overall economy? Are we looking at, a correction or something deeper?
Everybody has something invested in these data centers. Nvidia has bought up every GPU that exists in the world, right? They're making deals with OpenAI. They're making deals with everybody who's got some GPUs around. And then they realize, oh my God, the demand is going to be so big down the road. We better start building data centers to create more GPUs. But it's going to take 5 years to build those. It doesn't mean if that's 5 years away when they're going to be built enough to produce it, it doesn't mean that for 5 years, nothing's happening. There's a lot of economic growth that's going to go on for the next 5 years until the factory is built. From the little bodega that makes sandwiches to support the workers, to the lumber, to the contractors, to the steel makers, to the road builders, to all that. Just because it's 5 years away, that it'll take till the factories are done, doesn't mean that we're going to be in an economic cemetery for the next 5 years. That's insanity. That's really sort of naive thinking. That if Oracle, Meta, Google are each putting $600 billion into building data centers 5 years out, along the way, there's going to be a lot of economic growth to make that happen. To think that it's going to have a negative impact, that they're going to have to start producing these and all these companies are going to start investing in creating this thing. The CEO of SoftBank, I just described to you, Nvidia traded for $108 in November 2024.
Yeah.
And in 2025, it was trading at $900. In June of 25, it went to $1,200, split 10 for 1. It's now trading at $220 post-split. And the CEO of SoftBank said it is still undervalued at $220 post-split. And why he was asked, do you think that's the case? Because the demand down the road, the amount of CapEx expenditure that everybody is putting into AI is in the trillions of dollars. And as Dan said, we are only in the second inning of this revolution.
Wow.
There is so much more to happen. So the fact that anybody is to think that there are going to be a couple of bumps in the road, a couple of pebbles in your shoe, as we get onto that, the CEO of SoftBank said it's undervalued. He's a smart dude. So the bottom line is that I don't believe AI is, look, it's my opinion, and my opinion is based on work I've done asking people waste. I know I look like Einstein. I'm not that freaking smart. I ask a lot of really smart people what they think of these things. And in my opinion, Dan Ives is the number one top smartest guy in the AI world. Okay.
Yeah. Let's talk also about another part of this, how circular the AI ecosystem has become. You have everyone investing in each other and using each other, these cloud giants funding chip giants funding AI startups, those startups spending all their money back on the cloud. It's very incestuous, right? So how dangerous is that kind of circular investment? Is it healthy collaboration or a potential house of cards?
Yeah, you know what? It's a great question, and I don't know the answer to that. Yeah, it's weird. Is it bad? I don't know. I mean, could it all blow up in their faces? Possibly. But you know what? These guys are way smarter than me. And, it's the demand and the business is literally just in its beginning stages. Rarely have we seen, have you, or surely you and I have not been around for the second inning of any kind of a revolution like AI is.
Let's also talk about this other real world side. People are saying we're entering a K-shaped economy where the gains are concentrated at the top while everyone else is falling behind. So is AI fueling that K-shaped split? And who wins, who gets left behind if AI is driving all the growth?
I think that the rally is a little more democratized than just that.
Okay.
I think you're seeing growth in a lot of other sectors as well. Has AI been the leader of the recent bull market? Absolutely. Has everyone else left behind? I don't think so. I think we've lost sight of it because all eyes are on tech. But at the end of the day, I don't think that the Mag 7 is the only thing supporting this rally. And I think there's a lot more to the rally than that.
So yeah, is this a bubble? Is it going to pop? That's, I think, overall what people want to know.
I don't think so at all. I think this is really real. So I did an interview with a company. They issued an ETF called Crane Shares, and they make robots. I interviewed them last week, and they are selling 200 robots a day. By the year 2030, there will be 2 billion robots of just these robots. And they're going to be used for so many different things. This is not 30 years away. This is in 5 years. You're going to have robots in your house. You're going to have everything in your house is going to be done using AI. And it's not going to outsource human beings. It's going to make our lives way better, and that there's a massive future in it that we haven't even, as I keep saying, it's literally the second inning. We still don't even know a quarter of the things that AI is going to bring into our lives. It's going to make it better, and that where the potential is. Medical field, all different kinds of fields. Where, I mean, think about it. If I'm going in for surgery, right? Do I want a doctor who has actually had access to every similar surgery that's ever been done of the disease I had? Or do I want some doctor who's going to cut me open and look down in there and go, wow, I've never seen this before. Right? That's surely the line you don't want to hear when you're being cut open by a surgeon. This is not a bubble at all. Just because we don't understand it, and just because it's so big, I think the market's way too big to fail, first of all. When you start seeing other companies like Google, like Meta, like Microsoft, like Oracle, which are basically, our lives would be a lot different if they didn't exist. They are the lifeblood of everything we're doing on the internet and in computing, that they are stepping out of their comfort zone and not investing a couple $100,000. They're investing hundreds of billions of dollars. Oracle wrote a check for $600 billion. Meta did too, committing to this AI revolution. So I've got to defer to them and just go, you know what? I think these guys must know what they're doing. And so therefore, I don't think it's a bubble.
Okay. So besides Nvidia, what other companies should people be paying attention to right now? That could be that under the radar, because again, I think it was the chips. Now we're looking at companies fueling the data centers. I think next is probably quantum and robotics. What other things should people be aware of?
Building a data center, okay, it just doesn't suddenly appear. It's a 5-year build out, okay? And there are going to be a lot of companies that are going to benefit from the build out, whether it's quantitative computing, whether it's the energy sector. Apparently it takes shitloads, excuse my language, of water to run these data centers, right? And so there's something else. So there's a lot in the nooks and crannies of these things that people should really just go do their own homework, because I cannot tell them what to do. So I was trading this stock. I think it was called UHS. And for some reason, the stock was taken off and I had no idea what they did. And I had just been given a large order in it. And I said, I wonder why this thing is running so much. And it turned out they made one of the chips that went inside an iPhone, right? At the end of the day, everyone can easily do their homework. Use AI to find out what's in the nooks and crannies of AI, But think about it. If everyone's going out there to build the data centers, the amount of energy that's going to be used, the grid is going to be tested, right? So everyone can fairly simply go out there and find out the energy companies that are going to be needed for the drain on the energy sector when they build these companies, the amount of water it's going to take to actually run these data centers. I think that's where the play is.
Got it. And yet, how high do you think a company like Nvidia is going to go? I mean, is there a max?
To be perfectly honest, I don't think so. I think we're talking the amount of capital expenditure that's going into these names over the next 5 years is the number is,
Yeah.
from what I've heard, is $12 trillion. Okay. And so we haven't even begun to see the build out. As I say over and over again, I mean, I'm on with Dan at least once a week. And, to think that we are still in the we haven't even begun to see what AI can do and what it looks like on the other side of the mountain.
If you had to give one practical piece of advice for retail investors navigating this whole AI fueled market, what would it be?
Well, look, you could say, why would I want to pay these really high levels? Why do I want to pay the high of the market? If today's high is tomorrow's low, well, then you're not paying the high of the market. I think what you do is, it's like there's no wrong time to buy the market. If I keep telling you that we're in the second inning, then there's still a lot more room to grow. So my man, Dan Ives, who is, in my opinion, and most people's opinion, the number one tech analyst in the world, just released an ETF that is his 30 top picks in the AI space. It's called Ives, IBES. Okay. It was issued now 3 months ago. It already has $1 billion under management. It's the fastest growing ETF in history. It came out at 25. It's trading at 35. Okay. And it has exposure to, his opinion, all the things we just talked about. And as this whole story unfolds, he is going to adjust the ETF and the weighting of each company accordingly based on how they bob and weave and navigate through this thing, because there's still a lot of unknowns, there's still a lot of growth. If the game is 5-3 in the second inning, that has no impact on who's going to win the game. You couldn't tell me anything. Just because it's 5-3 doesn't mean anything about the end of the game if that's what it looks like in the second inning.
And by the way, again, this is not financial advice. Do your own research, please.
Yep.
What do you think? OpenAI, when is it going public? What are those companies that you're waiting to go public?
Once again, everyone needs to know I'm not a financial advisor, so I cannot predict. I don't have a crystal ball, and I'm not Oz Perlman, and I'm not a mentalist.
Yeah.
Okay. And I can't hypnotize you. However, the IPO market is a fascinating entity unto itself.
Yeah.
Okay. For companies to go public, you need a lot of different components to be happening. You need the economy to be doing well. You need the sector to be strong. You need the IPO market to be strong. You need to actually have really good bankers, and timing is key.
Yeah.
Okay. And so there are two reasons why people go to IPO, right? It's an exit strategy on the money side, or it's to raise capital for growth. Right now, if interest rates continue to go down, then they don't necessarily need to go public to raise capital for growth, but maybe they do. So it really depends. It's really hard. There's no way to predict. The IPO market is very fickle, right? Everything was super strong, super robust until WeWork. Now, everyone needs to understand that it's amazing. You would never think one stock blowing up the night before the deal was done to go public could have an effect on the whole overall landscape of the IPO market. But WeWork was that stock, because IPOs are based on confidence. You don't know that much about the company. You don't know how they trade publicly. And so so a lot of it is perception. A lot of it is confidence. Company has a product made in the garage, and then it grows and blah, 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 and all that kind of stuff. And then they decide to go public, and they go out on the road show, and they sort of take the temperature of the investment community, and they see what the big players are willing to put up financially, and they want to break out the allocation and all that. And it's not until the night before that they have to open their books to see what's really behind the curtain.
Yeah.
And on the night before the WeWork IPO, it turned out that when Mr. Greenberg, Goldberg, Goldstein, whatever his name was, Adam Weinberg, opened his books, it turned out he had spent all the money on cocaine and prostitutes.
Yeah, go watch the documentary or movie. It's actually fascinating. But I find it interesting, just speaking of OpenAI, because Robinhood is now giving out tokens of OpenAI and SpaceX even They're now offering tokenized shares to users.
If that's the case, well, then that's a good vote. That's a good vote of confidence for it going public. But when it's going to go public, we don't know. You're going to really have to take the temperature along the way.
Yeah.
I'm sure if there was a company that was taking odds on this stuff, and I'm sure there is, like Kalshi and Polymarket, right? Like after the sell-off that we've had over the last couple of days, is the probability of OpenAI going public less than it was a week ago? It's very possible, right? The temperature of probability has changes day to day to day, right? And so, it's like the probability of an interest rate cut in December last week was 75%. Now it's 50, right? So things like that change. Probability is a funny thing.
And FYI, OpenAI says Robinhood tokens are not equity in the company and condemns those OpenAI tokens. FYI, I just thought that was interesting. Well, that said, we are going into our lightning round. Are you ready, Peter?
Yeah.
Biggest risk in markets right now?
The catastrophism of mainstream media.
Most underrated sector or company?
I'm not allowed to answer questions that can be perceived as financial advice.
Is AI the new internet or the new .com?
Internet.
One word to describe the current market environment.
Roller coaster.
Peter, I so appreciate you being on. This has been a fascinating conversation, and you're just such a rock star. Thank you for joining me. Any final words?
Yeah, I think the next 6 weeks are going to be fascinating. If you were to ask me, is the market going to go up or down? The best answer I could give you is yes. And that is the most responsible answer. And if I answer any of your questions by I don't know, that is also a legitimate answer. As far as the AI thing goes, I will reiterate 100 times what's been told to me by people I believe are smarter than me, that it is a revolution, that while there may be bumps in the road and pebbles in our shoe along the way, I think that at the end of the day, sell-offs in the sector are more buying opportunities than chances for sale. And you know what? At the end of the day, there's no bad time to buy the market. I believe historically, if you've seen as many movies as I have, which means how many markets I've traded through and gone through, at the end of the day, markets go up over time. And so there is no bad time to invest in the stock market. When things are going up, you don't want to pay the high, but when they come in and they go on sale, you think something significantly changed in the company, and that's not necessarily the case. People need to just be realistic, find yourself a mentor or a teacher or somebody who can, has been around and has a little bit of a historic perspective of what's going on. Because, they, over time, markets do go up. The S&P 500 has, over the last 100 years has averaged at least 10% a year on the upside, right? If at the age of 18, you were to put $250 into the S&P 500 every month, at the age of 60, you'll have $1.4 million of passive income. And so that proves that, that markets do go up, and that, I would say a more broad, it's really hard picking individual stocks and sectors to invest in because, it's a strange world we live in right now. However, if you take something that's got a wider footprint on the market, like a financial instrument like the S&P 500, then that's probably a smart play. I've heard it said, a birdie once told me that that's probably a smart place to put your money. Put some money to work, invest in stocks and not stuff, and start tomorrow. And, think about it. It's like your grandfather used to have a big glass jar on his night table where he put his change. Start putting $5 a day, $5 a week, $10 a month, and put it into the stock market. Put it into something that's going to grow, right? And when have that urge to buy something, think twice about it. Walk around the block, have a piece of chocolate, and then put the money in the stock market.
Got it. I love how optimistic this was. And also, it was good vibes going into all of this. When a lot of people have uncertainty, you bring the good vibes. Peter, thank you so much.
Absolutely, my pleasure.
Wow, that was just one of my favorite conversations. Peter just brings the energy and the insights, and I could talk to him forever. So hopefully you enjoyed that as much as I did. Of course, you could follow him and all of his links at Einstein of Wall Street. Those are in the show notes, wherever you're listening or watching this show. And of course, this episode and the entire AI Download series would not be possible without Hivelighter. You've got to check out the AI Download Collection, where we've curated all the headlines from all the shows to make it easy for you to read and keep up with what we're covering. Click the highlighter link in our show notes to get smarter. If you love this episode, please subscribe, rate, and review this show and series. It helps me keep growing this show independently and really means a lot to me. Thank you so much for your support. We've got so much more coming your way, so I'll see you next time on the AI Download.